Hi everyone and welcome to today's morning report on Monday the 14th of March with me, Rich Perry, market analyst at Adtech Markets. We've got a decent start at the European Open. We've got a positive move on the DAX, especially the DAX really pushing 1.6% higher. The FTSE just a 0.5% higher. The FTSE is lagging a little bit. You've got the oil price down, and to be honest, I think equity markets are positive, but there's a little bit of sort of showing through on the forex markets and also commodities as well, that risk appetite isn't necessarily as strong as it might appear. You've got the dollar, which is stronger, but commodity currencies are all lower. And you've got the Japanese yen that's stronger as well. So what we have got is not only that, the treasury yields are slightly lower today. That's the 2-year, that's the 10-year, both only slightly lower, nothing too significant, but certainly it's helping to all drive a bit of a dollar rebound with the moves that we've seen today. You had Chinese data out over the weekend. On Saturday, you had industrial production and retail sales for China both missing expectations, and sort of that isn't a great signal. You still nothing sort of groundbreaking of any news, but still the Chinese slowdown is continuing economically, and it's not. I mean, you would be hoping certainly that the retail sales wouldn't be slowing down, because that is the sort of sector that they're sort of weighting their economy more towards now. So the fact that retail sales are slowing down isn't a great sign either. But what we do also have is this oil price, which is now, as we speak, just putting pressure on that uptrend again. Just falling away between 1.5% and 2% on the two oil prices. They are lower, and both WTI and Brent crude just falling away a little bit today. That's not helping the sentiment either. So certainly interesting moves that we're seeing there. Now, in terms of our economic data today, not a great deal going on. You've got this industrial production for the Eurozone, 1.4% for the year is the expectation there. But yeah, other than that, pretty much very limited on the economic data front. So that takes me to my chart today, which is the Kiwi. Now, we had the this uptrend that was maintained on Thursday from the ECB meeting, then a strong move on Friday, but the Kiwi closing sort of back around that 65-70 mark. That's a key resistance, sort of for the near to medium term. Just failed at that level, didn't it? That just came back into it again. But you'd certainly still say that there's a positive outlook on the momentum indicators. The RSI sort of forming sort of support around, or finding lows around the sort of high 40s, pushing towards 60. MACD lines slightly positive, stochastics turning higher again as well. So you'd still say that the outlook is sort of with a positive bias, but needs to have that sort of closing breakout above 67.50, which, as I said, is a key overhead level. And then if you saw that, you'd sort of obviously open up that 68.20 resistances that we had from a couple of weeks ago, or last week, 7-8 days ago, and then putting pressure back on maybe even the highs. I mean, you say for example, you're looking at the Aussie. The Aussie's already broken out above these equivalent highs, so the Kiwi is lagging. It had that rate cut by the RBNZ last week. That was on Wednesday. It's still trying to recover that, but certainly the Aussie has already broken out, so maybe the Kiwi is a bit of a laggard in that respect. But you'd still say that corrections are being brought into on this Kiwi chart. And looking at the hourly chart as well, you can see here this sort of push higher lows throughout, putting pressure on these overhead resistance 67.50. You've got momentum indicators which are sort of relatively neutral. Nothing massively significant in terms of the bullish momentum there. And not only that, you've got these MACD lines which have rolled over, and the stochastics as well. So maybe you're going to get a little bit of a mini correction, and you'd start to think about sort of 66.90, 66.70, sort of where you start to sort of between 66.70 and 67 figure really is where you start to see the support coming in again. So maybe that is a bit of a sort of a buying zone near term, but you'd still say that there's a fair amount of confidence that this one is going to be sort of putting pressure on that overhead resistance around 67.50, and pushing towards these highs, 68.20. But it's a bit more of a slow burner than the Aussie, which has been so strong in recent weeks. And pushing ever higher. So I wish you good luck in your trading on the Kiwi dollar today, and I will speak to you later. Thank you.